Next 30 minutes, I'll be looking at price movements in motor and home insurance throughout 2023 and exploring what we might expect from the coming year. So please, if you have any questions as we go through, please add them to the chat, to the questions section in the control panel, if that's available to you. And I'll attempt to answer as many as I can at the end. Okay, so quickly as an introduction, so at Pearson Ham, our mission is to help clients succeed through better pricing. And we are pricing practitioners, we're not market researchers, and have a really good understanding of how market data should be used to drive better pricing decisions based on first-hand experience of doing it. So we know where you're coming from, and we are on the same wavelength. What's most important to us is the accuracy of the data that's being shared with our clients. Unfortunately, insurance pricing data is not a commodity that anyone can capture online to create charts and reports. There are a lot of unusual pricing rules and adjustments that can be triggered by the activity of collecting the quotes itself, and our experience enables us to understand these and correct the data where necessary. What we report is a true representation of price changes in the market rather than movements that might be caused by other factors like the number of quotes run or the timings of those quotes. So just a little bit about the methodology. We use a panel of real consumers who have given us permission to obtain insurance quotes on their behalf. And every day we are running details through the big four price comparison websites and capturing the prices that are being returned. There's a rotation of panel members to mitigate any impact of quote volumes or patterns, but there's always a day-to-day comparison of the same profiles. We also conduct data cleansing. So as I said, we need to remove outliers and make sure that the data is accurate and what we're reporting represents price changes within the market. So today we're focusing on motor and home insurance, but we also provide similar market pricing services for pet and travel, and we'll be presenting webinars on those in the very near future. So please watch this space. I did see there are a few pet people on the call. Okay, so what happened in motor during the last quarter of the year, and what does this mean for the full year's premium movement? So although we did see most competitive prices increasing in the quarter, the rise of just over 3% is significantly lower than previous quarters this year. So thinking back, Q1 was up 7.2% on the previous quarter. Q2 was almost double that at 14.3%, and Q3 even greater with an increase of 16.3%. So as I say, 3.1% is a significant slowdown in premium inflation, and we even saw average prices drop between November and December on a like-for-like basis. So this is the first month that we've actually seen average prices reducing since April 2022. This brings the movements for the most competitive quotes to 20% over the past 6 months. So although that is a sizable increase, it reflects a slowdown of premium inflation that we're seeing when compared with the 33% figure of the 6 months to September 23. So the blue bars here clearly demonstrate the trend with the rate of increase dropping since July. So this means that over the course of 2023, the average of the top 5 quoted premiums for motor insurance have increased by 47%. So we saw monthly increases between 2 and 3% at the start of the year, which in any other year would be considered quite large. And the average monthly increase then moved closer to 5% in Q1 and Q3 as the full impact of claims inflation hit home. And as we've just seen, premium inflation slowed down in Q4 with prices dropping in December. So far in January, we're seeing further reductions for some providers. These are fairly significant, coming in at kind of -3%, -5%. However, we are still seeing premiums increasing for other providers at similar magnitude. So we're seeing price increases 3%, reductions of 3%. So I think we're in for an interesting Q1 as we move into 2024. Looking at things over a longer period, we can see competitive prices have moved up by 67% over the past 2 years. In January 2022, we saw big increases in response to the new regulations relating to general insurance pricing practices. And these reflected similar reductions being made for renewal business. So these are only based on new business quotes. We then had a period of recalibration as insurers adapted to the new trading environment and new ways of pricing. And this last year, spiraling claims inflation and some challenging financial results have pushed prices up. And this has continued throughout the year up until the last quarter, really. The increase in most competitive premiums throughout 23 has been somewhat subdued by the launch of several economy products. So that's both in 2022 and 2023, actually. For some established brands, we've seen increases closer to 80 or 90% throughout the course of 2023. So this chart shows price movement for a selection of the larger, more established products on a like-for-like basket of consumers through 2023. So we can see some quite sizable movements there. This chart shows the 5 largest movers from the previous slide, trended by month. And we can see very similar trends during the first half of the year when all were increasing prices. Insurer 5, we can see here starting to flatten out from August. So that will have put them in a much more competitive position for the second half of the year. And the others continue to increase rates for a couple of months before reaching a position which enabled them to also slow down. We see a similar picture for the next 5 brands. So some of these were able to slow down the rate of premium increase sooner than others. And we can see flattening out from September. And again, this would have put them in a much more competitive position towards the end of the year compared with their competitive set. So it's really useful to be able to understand what's driving performance, or whether it's your own actions or your competitors' actions that are impacting on your trading performance. So how close did I get with the end of year forecast during the last webinar? Well, I estimated 2023 would end the year between 47% and 57% up on 2022. So prices actually came in at the lower end of the estimate at 47%, brought down by November and December movement. So the biggest annual increase since tracking began, but prices dropping at the end of the year. As I said, this is not universal, and as we move into 2024, we're seeing movements in both directions. So we're in for an interesting few months, I think. So what did we observe for home insurance? So for combined buildings and contents cover, the most competitive prices for the same consumer profiles increased by almost 8% in Q4. This compares with quarterly movements of 9% in Q1, 7.6% in Q2 and 10.4% in Q3. So another quarter of premium increases. Over the past 6 months, this means that prices have increased by 19%. We did see the rate of premium inflation slowing down following a peak in July. However, prices started to rise again as we've been experiencing more adverse weather conditions, so particularly Storm Ciarán, Storm Debbie, more recently Storm Henk, resulting in flooding and damage to property. So again, those are going to be impacting on the premiums that we're seeing out there. So competitive prices for combined buildings and contents quotes increased by 40% throughout 2023. So we can see here premium inflation has been relatively consistent, kind of ranging between 2 to 4% each month. As I said, we did see the rate of increase slowing down after July, particularly in October, but then rising again at the end of the year. Again, this is the biggest annual increase since tracking began and driven by unprecedented levels of claims inflation. So the availability of and cost of raw materials, labour shortages, driving up claims costs, combined with extreme weather events, which have been increasing claims frequency. And again, that is having an impact and a knock-on effect on prices that are being quoted. Looking back a bit further, over the past 2 years, the most competitive prices for combined buildings and contents insurance have risen by 52%. As with motor, we saw new business prices rise in response to the regulatory changes in January, and this was followed by a period of adjustment. I think there was a bit more in terms of new market entrants and economy products, keeping the average of the top 5 lower in home than on motor. Obviously, there were a lot of lower tiered products launched in motor, but some of the very, very low priced new entrants weren't quite as impactful as they have been on home. But throughout 2023, we've seen consistent price increases throughout the year. So looking at 2023 premium movement at a brand level for some of the larger, more established products, we see some significant changes. So while most are kind of close to the average figure of 40% for the year, there are some notable outliers. So again, if we look at this trended by month, we can see that price increases have been fairly steady for most providers, but there's also been what looks like some corrective action a couple of points during the year for Insurer 1, who is at the kind of the high point there. And the chart focuses on established brands with the biggest price movements. The next 5 brands with the biggest increases show a similar picture. However, here it's a bit clearer to see that there is some flattening out of premiums from September to October, which was relatively short-lived. The rate of increase ramping up again towards the end of the year. So I think we are seeing some of those external factors impacting. So what does that mean for my end of year estimate? Well, I expected 2023 to end up between 33 and 39% higher than 22. So prices are pretty close to the higher end of the estimate, largely driven by the 3.2% increase between November and December. So I think we were tracking kind of quite nicely to the midpoint until those additional premium increases came in. So again, these are the biggest annual increases that we've seen. but with home, buildings and contents, there's no sign of prices leveling out just yet, as we've seen on motor. So I think there are some external factors which are a bit more impactful on home, in particular the extreme weather events that we've been experiencing and continue to experience, which I think we're seeing the impact of that on pricing over the past couple of months. Moving on to contents only. So here we saw a much smaller quarterly increase, just 0.4% at the end of the year. Premiums reduced between October and November before reverting in December. And we're seeing these increases actually continuing into January. So price movements month to date, we are seeing similar levels of inflation coming through. This means that over the past 6 months, we've seen contents only quotes increase by 8%. Obviously, most of this taking place in Q3, given what we were seeing in Q4, with monthly increases there around 2 to 3% each month. So throughout 2023, prices for the most competitive contents only quotes increased by 18%. So the year started with some fairly significant upwards movements, which slowed down as we moved into Q2. However, the rate of increase ramped up again in Q3 before slowing down and picking up again in December. So there's a little bit more volatility in here. I think some of the same factors will be influencing contents only pricing as is impacting combined. So we would expect there to be a similar pattern there. So this brings the 2-year contents only movement to 31%. As with combined cover, general insurance pricing adjustments in January 22, followed by a period of recalibration. And 2023 has been all about premium inflation. Q4 has been unusual, but I think an increased volume of claims has put pressure on premiums again. So I think that's why things have picked up in December and into January. As with combined cover, we've seen some significant shifts in pricing at an individual provider level. So this is for the full year 2023. And these are 10 of the larger, more established brands, where we've seen price movements well above the average of that 18%. So up to over 100, 65, 49%. So some pretty big movements being observed here. So competitive premiums have been kept down to an extent by some of the new entrants and economy offerings, which is clear here. Looking at these trended monthly, it's also clear that there are different strategies playing out. So the chart shows top 5 brands with the biggest price movements from the previous chart trended. And while most have moved gradually, there's also been some drastic action taking place up and down. So we're also seeing different providers moving at different times, which is going to be impacting on relative competitiveness. Similarly, with the next 5 brands, we see differences in timings, but also in approaches. Insurer 10 at the bottom here has reduced prices in December, which will have improved its competitiveness as others have been putting prices up. So I think there's going to be a larger than expected impact from those price reductions from Insurer 10 in December. So being able to contextualize helps to explain some of those variances in performance. Looking back at the kind of estimate, this one's been less easy to predict with some unusual price movements in Q4. So I had expected a year-end figure between 20 and 24% up on 2022. However, due to bigger than expected slowdown in price rises and reductions in November, actual prices for contents only moved up 18% in 2023. So a bit below my lower end estimate, and we can see that that's just been Q4 is kind of unusual when compared to the trend that was being observed before that. So what does 2024 hold in store for motor and home insurance pricing? Let's have a look at some of the key factors that could influence this. So first up, we've got claims costs. So the cost of claims is high. We're continuing to see increasing costs of parts, materials, and labour impacting both motor and home insurance. So ABI figures recently released showing increases of 16% for materials, 15% for labour, 46% for other costs in Q3. So this is going to be having an impact. Repair delays, again, because of the labour shortages, things are taking longer than expected, and this means that replacement vehicles or alternative accommodation is being provided for longer than expected, and also pushing up some of those costs. Adverse weather, so we're experiencing extreme weather events. We have been for the past couple of months, we have been throughout the course of last year, and we're continuing to do so. So storms like Kieran and more recently Henk caused a spike in home insurance claims. We're also seeing a lot of subsidence claims coming in following record-breaking high temperatures in 2023. So it's the hottest year on record. Combination of rising costs and increasing claims is obviously not a good one for insurers, and particularly impactful on home. And payouts, the level of payouts is increasing. Again, API figures are showing average home insurance claims costs up 24%. It's also reporting the cost of claims rising at a greater rate than increasing premiums. So obviously this is not a great position to be in, where costs are going up at a greater rate than revenues. So profitability, ultimately, these factors are all contributing to the same thing, and that's insurer profitability. So EY reported a net combined ratio figure of 122% for home in 2022, with predictions of 114 and 104% for 2023 and 24. So although premiums have risen significantly, the cost and the frequency of claims continues to cause challenges. In motor, it's predicting a net combined ratio of 114.6 for 2023, improving to 100.4 in 2024. So slightly less pressure here. And for some providers who have responded well to the market as it moved, there are some opportunities, and we're starting to see that. So overall, what we've seen in price movements for home and motor reflect respective cost pressures. Home has continued to rise overall, with some exceptions. Motor has slowed down, and average prices have reduced at the end of the year. We're seeing further reductions in January for some providers, while others, I'm sure, are still struggling with profitability. Both motor and home are fast-paced markets and very competitive. So I think cost pressures must be finely balanced with market positioning, and understanding competitor pricing is essential as we move into 2024 and progress through the year. So it's really key to keep an eye on the market, understand what's happening, what your competitors are doing, and what you should be doing in response to that. I'm afraid, given the delays that we had at the start of the session, we've run out of time now. So if there are any questions which have been logged in the chat, I will respond to those individually over email. But right now, I'd just like to thank everyone for joining us today. Wish you a happy new year again. And if you do have any questions or would like any more information about what we've just presented, or anything else, then please do feel free to get in touch and contact me directly. on Stephen Kennedy at pearsonhamgroup.com. Thank you very much, and I look forward to next time.